one of the most successful hedge fund managers. He doesn't do CNBC interviews or Money Beat interviews. He doesn't make grand presentations at high-profile conferences. He doesn't, in fact, speak publicly at all. What does he do? Makes a lot of money for his investors. Rob Copeland, the reporter, not the hedge fund manager, he profiled David Abrams, a man described by one peer as a unicorn, as you quote in your story, Rob Copeland. How are you?
I'm good.
Tell me a little bit about this guy. He is a very, very reclusive billionaire.
Exactly. Well, he essentially has built this one-man cash machine on his own. He has a few analysts. He has a modest back office staff. What he's been doing for the last 15 years is essentially printing money from a single floor in Boston.
Right.
What he does is he buys value investments, Warren Buffett style, if you will. He holds them for a long time. He doesn't trade in and out of the markets, and he's been very good at it.
Yeah. Do you have any idea why he is so private? I mean, is it just a personality thing? Is it some kind of performance thing? One of the guys you quoted in the story said, I guess you were doing a little digging, Rob Copeland, right? And one of the people you told said, well, there's a quote right there. He probably would have preferred you not find him. Did you find him? Let me ask that.
I did find him, and he wasn't interviewed in the story, so you can assume that he didn't bring this to us and want a big splash. Essentially, in hedge funds, there is an appeal to many investors of having discovered something on their own. Some of them like someone like Bill Ackman, who goes on CNBC, and others really feel that there's an advantage to just sitting and investing. Look, he's a quiet guy. His friends told me that he's like that in his personal life too. He's an NFL part owner.
That's amazing.
And yet you don't see him, in face paint in the front row screaming.
Right. He bought a piece of the Oakland Raiders.
Right.
Because he thought it was, and he's right, good Lord, he thought it was a beaten down asset.
Sure. It's a classic Abrams trade. This one is not for his investors, but for him, the absolute cheapest football team in the National Football League, and he buys a piece of it in 2007. It's worth a little bit more now, but he hasn't sold. And look, you need a very significant amount of money to become an NFL owner.
Sure. And, okay, unusual methods, but they work. I mean, his returns over the last 15 years, you can see it right there. I mean, look at what he has done with his own methods.
It's pretty incredible to have a track record like this in the hedge fund industry, to be managing billions, to have billions of your own, and to have no one have ever heard of you. He has approximately doubled what the average hedge fund manager has done. He's tripled what the S&P has done. I've written a lot, you've talked a lot, and I think it's very important to talk about how hedge fund managers have underperformed the S&P in recent years. Here's a guy who since 2009 has just whipped it.
Hey, let me ask you quickly, just very briefly, how did you get turned on to this story?
I'm always talking to investors. I'm talking to people in the industry, asking who they would like to see a story on. And a few people had mentioned to me that this was a quiet guy. Also, he's raising a fourth fund, or he's discussing with investors raising a fourth fund. So, if he crosses $10 billion, you're not going to escape the Wall Street Journal.
Good. All right. Leave it there, Rob Copeland. Thank you very much.